Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special property report brought to you in association with Bank of New Zealand. Today we look at figures from the Real Estate Institute of New Zealand for December. Now these are the most comprehensive and up-to-date figures on house sales and prices across the nation. And they show that volumes were up 5.6% in December from November in seasonally adjusted terms. Now actually total volumes were down, and that's because obviously over Christmas people aren't buying and selling houses so much. But underlying, the market remains reasonably strong, particularly in a couple of areas, Auckland and Christchurch. Now the median house price actually fell in December from November, but that sometimes can be skewed by lots of houses selling in a certain price bracket. And what's happening at the moment is that more expensive houses seem to be selling better than cheaper ones. Essentially, richer people have more money than poorer people and can get more loans from the bank. Now, a better measure, some would say, of house prices is the house price index that the Real Estate Institute puts together using Reserve Bank methodology. Now, this takes out the skew you get with more houses selling in certain price brackets. And that house price index fell 0.1%, so basically it was flat in December from November. However, that doesn't tell you what's happening in some of the hotspots, and Auckland is one of those hotspots. We saw a price increase there in Auckland. In fact, prices are 1.3% above the peak from 2007, so Auckland house prices essentially are back at record highs. Overall though, the nation also is seeing house prices above a year ago, up 3.1% according to the house price index. However, they remain below their 2007 peak. So you're getting a sense of the two-tiered market here. Auckland and Christchurch doing pretty well, much better than the rest of the country, and up near their record highs, particularly Auckland. There's a couple of reasons for that. In Auckland, demand has been relatively firm. Remember, there's quite a bit of migration, not just from Christchurch, but from the rest of the country. And supply of new houses in Auckland is particularly weak. There hasn't been a lot of new construction going on. And of course, Christchurch has its own supply issues with the earthquake. Also, we've seen quite a bit of mortgage approval activity going on. So people are borrowing money and pumping that into the housing market. When you look at mortgage approvals in the first 3 weeks of December, these are figures from the Reserve Bank, they show we saw 3 consecutive weeks of approvals of more than $1 billion a week. Now, that's the first time we've seen that since December 2007. Also, the bank's doing quite a bit of 80% plus loan-to-value ratio lending. Over the last 3 months or so, we've seen more than $800 million worth of 80% plus loan-to-value ratio lending going on. Those are the last 3 months of reports from the banks in their general disclosure statements. So essentially, people are seeing that interest rates remain lower for longer. Remember that we're not expecting the Reserve Bank to increase the official cash rate until at the earliest late this year, maybe not into the middle of 2013 according to the New Zealand Institute of Economic Research. Now, just to give you a better sense of what's happening with house prices, we've got our interactive charts of the house price index at the bottom of this story. And I'll just show you how you can go through and look at those stories. So when you scroll to the bottom of this article, remember you're watching the video, underneath that is the article, scroll to the bottom and you'll see some interactive charts here. This is the house price index, and this is the number that you get when you again take out the skew that you see in house prices because they're more expensive. And I'm showing you here the overall New Zealand house price, and you can see the big boom in house prices 2002 to 2007, obviously pretty much a doubling of house prices. Then the recession through 2007, 2008, bit of a bounce early 2009, and then sort of bumping along there for a while. Bit of an improvement in the last year or so. So that's the nation. Let's look at Auckland, and you can see here, this is just the last few years. Let's scroll back a bit so you can get a sense of the scale of it. Obviously a big jump up 2001 to 2007, a drop down, but now we're back above those peak levels again in Auckland. However, not so pretty for the rest of the North Island. This is separate from Auckland and Wellington, so provincial New Zealand, the sorts of Wanganui's, New Plymouths, Hamiltons, those sorts of areas. Obviously the same jump up, but really we're still down around about 10% from that peak, and it hasn't really recovered much in the last couple of years. Christchurch, of course, you've seen a pretty strong performance in the last year or so. The undamaged houses are selling pretty well. And when you look at it in the context of the last 10 years or so, prices are back near their record highs in Christchurch. But it goes to reinforce the two-tiered nature of the housing market in New Zealand. We've got Auckland and Christchurch versus the rest, and particularly provincial New Zealand still doing it pretty tough. I'm Bernard Hickey. That was a special housing report brought to you in association with Bank of New Zealand.